Good afternoon, everybody. Welcome back to Cilinix Crypto. Hope you're all doing great, and welcome to this new video on trading education. And in this video, I wanted to talk about CME gaps and how to trade them. Now, for some of you might say, "What did he just say?" And some of you might already know about CME gaps, but in general, I will briefly introduce this concept and what it is to you, and then we will spend the majority of the time talking about how to actually identify them, which is very easy. I'll just show you, and how to trade them. And I think in general, like if you already know this concept, I still think that there's value in me telling you how to trade it, or at least how I, in my experience, have found out it's good to trade. But if you're completely new to this concept, I think this is extremely valuable, and I think it will open up a new world to you, albeit it's a small world. All right, but we're going to be talking about CME gaps. All right, so in short, what they are, they're gaps in prices. All right, now in crypto is a 24/7 market, right? So the market is always open, and therefore you do not really have any gaps. Compare that to, for example, stocks. Right, so I can quickly show you the stock of Tesla right here. You have all these gaps between the prices, where the close price of one day is higher than the open price of the next day, which creates a gap like this. Now in crypto you don't have that, like I said, but what you do have, so that's why there's no gaps on the charts. But what you do have is gaps in the CME chart of Bitcoin. Now CME is the Chicago Mercantile group. No, what is it? It's a Chicago Mercantile Exchange, and on there you can trade a lot of things. So, for example, you can trade the S&P 500, you can trade corn, you can trade oil futures, but you can also trade Bitcoin futures, and a lot of volume goes into this. All right. So what happens is that the market for Bitcoin on CME, on the Chicago Mercantile Exchange, does close on Friday and opens again, depending on your time zone, but late Sunday or early Monday. So what that means is that with the CME exchange, the Chicago Mercantile Exchange, Bitcoin will have these gaps. All right, and those gaps are very, very important and tradable for Bitcoin. Now, first of all, how can you actually identify these gaps? Very easy. All right, just go to tradingview.com, go to indicators. I will quickly turn this off. Go to indicators at the top right here and type in CME gap, and then I would use the one I find the best is this one, CME gap BTC by Anche 1991. Very good. Then you get this, and then on the chart you will see the CME gaps that actually arise. Now, if the price is higher at the Sunday or Monday open compared to the close on Friday, it will be a red one, but that doesn't really matter. And if the price is lower, it will be a green one. All right, because in general, if the price opens higher than where it closed on Friday, what you expect is that we will fill that gap. All right, and that is the main way to trade it. Because historically, not always, but historically, very often that gap that is made in the weekend between the Friday close price and the Monday open price will be filled, right? So the price will fill that gap. Now, the reason why I wanted to make this video today is that with the news we got yesterday, which if you're watching this video later, the news that we got is that Trump announced a strategic reserve for crypto. We made a massive CME gap, right? And you can see that right here. I mean, the Friday close was around 84,740, and the Monday open was right here around 94,000. So that creates this huge gap on the CME chart, and historically those gaps are very often filled. Now, it's not the case that they're always filled, right? Otherwise it would be extremely easy to trade it, because you would just short Bitcoin right now with a wide stop loss probably, and it would fill the gap and it would be fine. No, sometimes they are not filled. Sometimes they're filled months and months later. All right, so you have to add this knowledge of there being a gap with other fundamentals. So, for example, what you can see for Bitcoin right now is that there's a gap, all right? You know that there's a tendency that these CME gaps will be filled. But at the same point of time, what you also know is that Bitcoin has been able on the higher time frames to actually break above a significant level right here. We know, if you take a look at stocks, how they've opened today, and the dollar strength index, that the fundamentals are actually quite bullish. You know that fundamentally, just in general with the Trump administration, at least after the announcements of yesterday, there's bullish momentum coming for the fundamentals as well. So would I short the price right now? No. However, what you can do is that if we get some technical bearish confirmation, for example, a breakdown below 91,000, which is our main support level, then you can short, or at least you can evaluate a short, and you know where to take some profits, because like I said, very often the CME gaps get filled. So then the lowest part of the CME gap would be 84,700. You place a stop loss a little bit above that, and that way you can trade it. But that's what I mean with like these CME gaps. They exist. They almost open every single week. Sometimes they're bigger, sometimes they're smaller, but you have to mix it in with other fundamentals to actually know whether they're going to work or not and whether they will get filled. For example, we actually made a CME gap right here, the 10th of November, or the weekend of the 10th of November. The price opened higher than it closed on Friday, but you can see that it was not filled, all right? The price opened on Monday right here at 80,000, and the price just continued going up because the fundamentals were very, very bullish. Now, what's interesting is that this gap we made, can I find it real quick? Yeah, this gap we made right here, the 10th of November, was actually filled, but much later, with this candle right here. So that's a total of 3.5 months later. So therefore, CME gaps, like it's just in general, they create a very strong key level. And if they are not filled, there's a high likelihood that much further in the future, you will get a reaction from that level. So that's another way how to use them, all right? Just long-term, finding strong key levels. But if we take a look at some other CME gaps, for example, right here, Sunday, the 2nd of February, the price actually opened lower than where it closed on Friday. Price kept falling. We hit a significant support level. But here you can also see, I mean, we already had a massive sell-off. So the price opened on Monday at this level right here at like 98,000. But we were already selling off. We hit we had a bearish breakdown right here. So was it a smart choice to instantly long? No, not necessarily. But then when the price actually fell down lower into support here at 92,000, you knew that there still was a gap to the upside. So more of an incentive, more of a reason for the price to get up there. We hit a strong support level. So that's another way how you could have actually longed that. Took profits at the CME gap fill when the price filled the price right here, went up to the previous Friday close of that CME gap. And it would have been an amazing trade. All right, so CME gaps in general can be super useful, but you should not long or short them blindly. All right, take a look at the technicals, take a look at what happened the week before, take a look at the fundamentals. And then based on that, you can use these CME gaps, first of all, as excellent entries or excellent entries for a short in this case, but also excellent take profit limits, for example. But you can also use it more of a broad thing of the price being more likely to go that way and adding that to your own analysis. In general, would definitely recommend you to check out some more CME gaps in the past because, like I said, they can be very, very useful. But for now, I think that's what you need to know. All right, so that's a good starting guide on actually what CME gaps are and how you can actually use them in your trading. If you do have any questions, make sure to join the free Telegram and Discord groups and we can discuss them there. I think that's best because the YouTube comments are still filled with bots. But for now, thank you for watching. Take care and bye.